Good evening, good evening, good evening. What's going on, everybody? This is Richard down here in Atlanta. I just wanted to post a video about inverse relationships and how the markets are interrelated. For one, last week I hope everybody caught some of them good moves the day after the Fed decision. That's kind of like what we like to call down here the club of free money day, because I don't know what it is about them days after the Fed decision. Just have things just flowing, just flowing smoothly. Yeah, excuse me. Right now, I'm looking at the S&P 500, the XPX. This is 500 of the most powerful stocks in the United States. And the reason why I'm starting with this because this also plays into the Forex market. Markets are connected, they intertwine together. And if you can get ahead of the game and understand that, you can take advantage of some very, very powerful moves, which I'm going to try my best to point out now. So, first of all, this is a weekly chart of the S&P, the SPX. That's the same thing as the S&P 500. And of course, I'm a pattern trader like I mentioned before. And this right here, what's setting up, what has confirmed really, is a bear flag. And how you measure a bear flag's projected move, if you just take the first of the pole, this is the pole, the first one I draw, then you move it down off of the breakout, and that'll bring us back down to these levels. Let me get me a horizontal ray to these levels right here, which is brings us right back down to what they call previous support. And the reason why I'm pointing this out is this is what we're anticipating to move right here to this area right up in here and bounce. And then we break this low right here, and I think that might be what they call a 20% move, and that would be considered, let me delete some of the stuff over there, that would be considered an official bear market. So if the S&P is in an official bear move and we're in an official bear market, what is the flight to safety entity? Well, the flight to safety entity, one of the main ones is going to be gold. So let's pull up the gold chart. I'm going to click over to gold, and this is a gold monthly chart. And I'm going to go to a gold weekly chart. Alright. Y'all follow along with me, please. And so, as you can see, gold's been cycling up slowly but surely. People are slowly but surely moving them funds over to gold. And we're just approaching this major resistance area. If I can block it out right quick. This whole little area over here to the left, structure. You see how we came and tested it one time. Alright. When I say we came and tested it one time was, this was the creation of the structure right here, creation, right? Then you have a test, it came up and test, right? And now you can see how it is actually trying to break through it. And on the bottom side of it, as you can see, the higher lows are just moving up higher and higher and higher. And you see, you get the point, it just keep moving up higher, 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 the lows, what I'm saying. So let me delete that off. Somebody might come watch this later on, so let me mark this with an eclipse. That low is moving higher, alright? Let me clone that. Clone. And that low is moving higher. And the last one, which is this one over here, this low is, there we go. These lows are moving higher. So we're pressing up against previous structure, and if we break this structure, that'll be a good long to get into. But me personally, I don't like to trade gold, but I use gold as a gauge to take advantage of some of the more fluent Forex pairs. Alright, so to make sure we flowing right, you look at the S&P is turning around, it's positively finna enter to a bear market. And then you go out to your gold, flight to safety entity, right? Gold is going up. So how does this play into the Forex market? Okay, let me show you how. First of all, for the ones who don't know, gold and the Japanese yen, which is what I just pulled up right now, they move counter to each other. This is a monthly chart of the USD Japanese yen, right? So you can see how we're having kind of like this double topish area forming on a monthly chart, right? What I mean by double top, this case people don't understand patterns. Look at this is one top right here, okay? And look at this one is one top right here. All right, possible double top, and then we get a break of this neckline, which will be right here. That would confirm or commingle with gold breaking out into new highs, right? So let's go out to a weekly chart on USD JPY weekly chart. Let's erase some of this stuff that's on here. Obviously, this stuff is going to be different. As you can see, we've already broken what I like to call the neckline in gold. I mean, not gold, USD JPY, excuse me. That purple line is the neckline, right? And we are approaching previous structure, which will be previous support, okay? So it's possible that we might get a bounce from here, but if we break down out of this structure, that will be the neckline on a monthly chart. So let's go out to a monthly chart. And you see it will break that neckline of a monthly chart. Let me shrink it down some. And we are really rolling, all right? So if that wasn't enough, probably one of the ones I like to take more advantage of is the Euro CAD. So and it moves counter to the dollar yen, all right? So the reason why I pull up Euro CAD and I like to trade Euro CAD, because Euro CAD, it only been trading what since let's go back and see, just in this nice little tight little range for a long time. So now we finally probably going to be breaking out. As you can see, this double bottom pattern forming right here. Some people may see these as harmonics. I don't really trade harmonics. I'm a pattern trader, like I mentioned before, and we're breaking out of those highs. Let me get my horizontal ready. So that purple line will be the breakout. So now we break out of those highs, it will go with, and this is a monthly chart, it will go with the Japanese yen, dollar Japanese yen breaking down, right? See how they move counter to each other. Go all the way back and recap. The overall stock market in the United States is breaking down. So the flight to safety will be gold. Gold is breaking up. What moves counter to gold is Japanese yen, which is breaking down. What moves counter to Japanese yen is Euro CAD, which is breaking out. All right. So here's another one that I like to share with people with pound JPY. All right. Pound JPY, right, is also forming what I call a bear flag, right? So therefore, pound JPY will be moving counter to gold, and this one hasn't been. This one only been trading since 2009, I think, if I'm not mistaken. Let me go back and see. I think this only been traded since 2000. Oh no, this is a different one. I'm thinking of something else. I'm sorry. Okay, so pound JPY is forming a big bear flag, right? A big bear flag. And what I mean by that is, draw this flag out. You take this long pole right here, right? Pivot point to pivot point. Draw that flag, and you see how on the monthly chart it has confirmed the bear flag by closing below that bottom line, right? So we measure that move down. Simple move would be take this and move it out to from the breakout, and we'll be going down there. Possibly. That's what they call projecting moves, projecting and forecasting moves on patterns. I'm a pattern trader. So to recap and kind of take it into the next week, pay attention to the overall market. I would. Overall markets possibly maybe enter to a bear market. If the overall market move to a bear market, the flight to safety will be gold. Gold is breaking out of previous structure and may start running. Okay, gold moves counter to USD JPY, which is this one right here. Okay, Euro CAD moves counter to USD JPY. All right, so in other words, make sure you're not shorting both of these, because it's not going to be. It's going to be shorting or going long. Both of them need to be going counter in position. And pound yen moves counter to gold. So to kind of put a button on this, I would be paying attention highly to the overall stock market of the United States, because these might be the times where we can get in those forex trades and ride them for weeks at a time. You know, 20 lots or $20, however you want to call it. That can be some substantial amount of money. So anyway, I just wanted to share that with y'all, and I'll check with y'all in the group and keep those pips up and keep those trades in the black. All right.